Hello, Thomas. Welcome to the Builders Podcast. It's a pleasure to have you here.
Thank you. Thank you for having me.
Would you like to start with a short introduction of yourself and of Spinwheel, of course, as a company?
Yeah, sure. My background has been in fintech for more than 2 decades now, primarily on building out large scale infrastructure.
Mhm.
Previously, it was in the payment space, um, and due to a lot of personal reasons and people close to me, really started focusing on the consumer credit space, and that was
Hmm.
the genesis for Spinwheel. So, this is the third company I've started. Um, and this one's important to me because one, uh, when you think about the overall space, consumer
Mhm.
credit, we're building what we believe is the future of consumer credit by rewiring how consumer credit data is accessed, managed,
Hmm.
embedded, and then enabling the actions that people need to take to really improve their financial outcomes. And we're a B2B company, so we don't offer
Mhm.
directly to consumers. We offer to other companies. And we think that by empowering companies by using our technology and our APIs, that they can have better outcomes, and that their borrowers, their consumers, and their
Mhm.
users can have better financial outcomes. And so that's really what we're focused on here at Spinwheel.
Nice. I really would like to jump into the credit part because I'm very interested in that on that side. But first of all, I wanted to understand, this is your third company. So how's the process of arriving at that stage, actually founding one and founding two, and the third one is going to be pretty interesting. So first of all, which were the first two companies that you founded over time?
Yeah. Very early on, I was one of the very first. I think it was like top, first like 10 people in a company
Hmm.
called Blackhawk Network. That company went
Mhm.
public, spent a decade there, ended up running an
Wow.
independent reporting segment of that company as the GM, the global GM of all their digital businesses. And what I learned from that was really how to build and scale companies and teams.
Hmm.
Um, both on the technology side and on the people side, and obviously on the revenue and margin side. Left, started another company which was a conversational commerce company,
Mhm.
um, and started that in 2015. Ended up selling that one in 2017, and
Mhm.
uh, that did fairly well. And then in 2019, um, really started focusing on how we could use my background and my co-founder's background in fintech infrastructure to
Hmm.
really have an impact on people's financials outcomes. And that was really what the genesis was of this company.
Hmm. That's very interesting because it's also different background and different verticals. So, you need to have very different transversal skill set in order to be able to apply them to different verticals like this one. And how did you end up in fintech in the end? So it was like a chance, or you saw a gap in the market. How did you end up
So
there?
my before ending up in fintech, I was I sort of found a knack in being able to really deliver large scale initiatives.
Hmm.
Almost became like a sort of a turnaround person who, when there was a large technology initiative or a large company initiative that was in trouble, they would say, "Hey,
Mhm.
Tomas, go in there and solve it."
Hmm.
And in the very very early days of Blackhawk, there was trouble. The technology wasn't scaling, technology
Yeah.
wasn't working. There wasn't a clear path on how you would go and achieve the vision of the company with the current architecture that was in place. And so that's how I got into fintech. It was just another one
Hmm.
of these massive initiatives where millions and millions of dollars were being spent, and they said, "Hey, go in there and help figure the technology out." And I think that's actually one of the common threads. So even though let's say payments is different than consumer credit, the common thread for me across all of these has been really uh, how to build infrastructure that scales in each of these things that is tied to really the value proposition of the business. And that's something that I've been able to carry along with me across all of these fintech companies that I've been
Hmm.
working for and starting.
So basically, your point is being very, very good at scaling up those kind of use cases and gap in the market that you find over time. So you understand where's the problem, how to solve it, and then you're basically very, very good at scaling up in a huge way.
Yeah, I think so. The other part I would add to that too is also understanding how to apply technology to achieve those
Mm.
outcomes. So I think that's the other dimension that I would add to what you said.
Mhm. No, that's a very good point. And then all of that basically led you to credit in the end. So I think that credit is one of, and by chance I was speaking about this same topic today with a contact of mine. I think that it's still one of those missing gap in the financial ecosystem that we are not able to cover, or at least not able to cover globally in the same exact way. So for example, you have banking services, you have payments, and you have different kind of companies doing that all over the world in more or less the same way. Okay, but when coming to credit, you cannot apply the same model everywhere, and it's kind of very, very hard to have something that is scaling up, in a pretty good way. So the question here, in my opinion, is how do you actually scale credit, mostly when talking about different countries?
Yeah. So I think you have to go all the way to the very, very fundamental aspect of consumer credit.
Mhm.
And across the board, consumer credit is based on data and information that helps you
Mhm.
decide or helps a lender decide if credit should be extended to another person, right? Or another entity.
Mhm. Yeah.
So when you look at that most fundamental level, you think about, the models get built upon that data
Mhm.
and information, but at the very, very fundamental level, it's the, do you have the data? Do you have the information? Do you have the insights that you need to correctly underwrite or make the decision to extend or maybe not extend, or decide how much to extend to an individual?
Mhm.
And you said it absolutely right. There's been, from our perspective, there had been pretty big investments and and big innovations that have happened in so many other
Mhm.
dimensions of fintech. But if you looked at the consumer credit space, you didn't see that much. I mean,
Mhm.
the large bureaus that operate globally, typically, like, they have been the staple of the consumer credit
Yeah.
infrastructure for a very, very, very long time. Decades. For 4 decades, 5 decades now. And I think they serve an extremely valuable purpose, and that data is extremely important. But as consumer credit has evolved, and as you think about how to solve some of the key gaps that have emerged, you can't just take the same solution that you've had for the last 5 decades and say this is enough. And so for us, we said, hey, this is where a fintech infrastructure solution can really make a difference, because we can
Mhm.
augment, we can enhance, we can bring more data to the table, more accurate data to the table, and not only just the data, but also enabling the actions on top of that that can impact that data. So a very common, um, a very, very common dimension, or a very common ratio that people think about when you think about consumer credit, is something called debt to income ratio, DTI,
Mhm. Yeah.
right? DTI is not static. It changes
Over time. Yeah.
as your credit increases or decreases, the usage of credit increase or decreases. It also changes as you make payments to each of these.
Mhm.
So it's a very, very fluid ratio. And if you're trying to capture DTI on a snapshot in time, but that snapshot in time is not going to capture what's happening around it, the fact that a payment is coming up, or that a payoff is happening, or that
Mhm.
maybe they just used a bunch of their credit, you're going to get that wrong. And so for us, we think this concept of real-time data and real-time actions around payments is super important, just to that very fundamental ratio when you're evaluating. So back to your question about how can you make an impact on consumer credit globally, I think it starts with, if you can improve the data, if you can improve the actions, and you can you know enable it with real time data, you start actually being able to have better decisions, which ultimately should enable more um, uh, access to credit, more
Mhm.
transparency, but also with better outcomes, so that when
Mhm.
people are being underwritten, or when people get the credit, they're getting it terms that actually make sense for them.
Yeah.
And you kind of eliminate more of the guesswork. So that's fundamentally, we think that if you get that base layer right, or if you improve that base layer around the data and the actions, then all boats rise, and you actually can improve the overall consumer credit picture globally.
No, I totally agree with you on this one. I think that people usually see those kind of things from two different perspectives. The consumer mentality, the consumer point of view, where they actually see or understand more if they get the loans or not, if they get the credit or not. And then you have on the other side the company perspective that in most of cases is the bank perspective, actually trying to understand, okay, how many of those credits am I able to actually give out, and how many of them are actually being collected in the end. That those are two very different kind of perspective, but both of them are based on the same exact data that are basically the income, expenses, and transaction over time. And it's kind of very hard to match them in the end, because as you said, if you take a snapshot of that, it could be a snapshot in a very good scenario, in a best case scenario, or it could be the worst scenario possible. Like um, I was taking a look at a very similar situation in the MENA region a while ago, and I had a company that was actually declining more or less 70 to 80% of all the requests in terms of loans, for a very simple reason. Most of the people that were actually looking to take those loans and those credits, they had part of their income that was on paper, paid by the employees,
Yeah.
and part of the income was tips provided by, for example, in a restaurant or in a shops, and they cannot prove tips, of course. So you have a lot of transaction, very, near to the limit of the kind of expenditure that they had, but they had a lot of cash on top of that, and they couldn't get, the loans approved. And that is a data mismatch that you have in the market, and it's the exact same kind of situation that you are describing right now, I think.
That's right. I think, and you see that across the board, whether it's
Mm,
income, you may see that on taxes. And the way we think about it is there's all these data attributes, think about it that way, or sources of data that if you can actually unlock and bring to the table, you actually will then impact the underwriting and consumer credit in a positive way.
yeah.
Um, there are great companies out there that are focused specifically on the topic you mentioned. One of the things that we focus on is how do you do that in a way though that eliminates the need, eliminates the friction, because that's the other
Mm,
problem. If you think about it this way, you could potentially solve all these data issues if you
mhm,
said, hey, I need to see a ledger of all the tips that you got, and I need to have that signed by your manager or the company that
mhm,
got that, and I need to see access to your bank account and give me all of your passwords, and then upload all your statements. And the reality is, like, yes, someone could do that, but it does two things. One is the friction there for the consumer to do all those things
yeah.
is prohibitive, and two, if it's not done from the source, it actually introduces a vector of fraud and risk that now
Mm,
you have to account for.
yeah.
So the way we look at this is, in anything that we do, is how can we do this in a way that eliminates that friction so it's not prohibitive, and two, not introduce fraud and risk vectors that weren't
Mm,
there to begin with. Because I think that's the trick.
yeah.
If I gave you a sheet that said, here's all my tips for the week, and my manager signed it, you could take that as potentially the truth, but you have no idea. But like, so
Yeah.
this is the sort of stuff. It's like, how do you do this in a way? And that's really our vision, is how do we start doing this in a way that removes the friction, that's so it's not prohibitive, but doesn't introduce the fraud and the risk. And that's
Mm.
really the trick here. If you can do that right, I think you have a really great solution for the market.
Yeah, I totally agree. And how do you actually do that? Because, like, for example, I know a lot of companies in Europe that took advantage, of course, of open banking in order to, for example, connect the old account and take a look at, for example, the last year of transaction in order to make a match. You can make the categorization, you can understand income, expenses, all of those kind of things. But I was wondering, how do you actually do that? Because I think that the US as a market is pretty different under that specific perspective.
Yeah, we don't have, in the U.S. we don't have the same um, uh, regulation, and we don't have the
Mm,
same frameworks that govern open API access to all the bank accounts. I think the arc of it is moving in that direction.
mm.
We've probably had some maybe small bumps in the road or large bumps in the road with the recent CFPB ruling and
Yeah, I heard
uh,
about
and
it.
JPMC,
Mm,
but
mhm,
uh, but I think it's generally going that direction. But so the way we do it is, we look at this from a very first principles perspective,
mm,
and that is, um, one, how do you ensure that Tomas or Michelle, like, we are who we say we are. Like that's the most important thing. If you don't get that right, then all the rest of the stuff is suspect. Let's put it that way.
Yeah.
So you have to get that right. And once you can ensure that it's the person who is representing themselves is truly who they say they are, and you've been able to authenticate that, then it's a matter of going to the various data sources and saying, hey, I can prove that this is Tomas. I can prove that he is asking for this information. And I would like to retrieve this information on Tomas's behalf. And that's really the high level framework that we do. Now, the technology to make that seamless is actually very, very complicated because it isn't just one data source. Like, so for example, I can't just go to your bank account and then understand all the details about your credit card that's not at that bank account. I can't go to your bank account and understand all the details of the loan that you may have on a car or a house or anything else that you may have, a student loan. And so when you start zooming out, you start seeing that there's 6, 7, 8, 9, 10 different data sources that you have to connect to. And you can't, it's not like just a serial connection where you can connect 1, 2, 3. There's this orchestration and logic that has to be applied so that you can get this data in a way that, 1, makes sense, 2 is coherent and digestible, and 3 is accurate. And that's, if you think about what Spinwheel actually does behind the scenes, is a combination of, simplifying, ensuring that the person is who they say they are, and then really simplifying this entire orchestration layer to connect all these data sources in a way that our clients don't even have to understand how that's done. They just say, hey, you know what? I make a simple API call to Spinwheel, I get this back. But behind the scenes, it's a very, very complex network of AI and integrations that we've done to simplify this messy map of data and messy process in which you can go and retrieve it on behalf of the consumer. Now, I think in Europe and other areas where they've legislated some of that simplicity, I think it's better. But I don't think you're ever going to get to the point where it's, hey, make a simple API call to 3 places and I'm done. The data and the insights are so diverse and scattered that we think from Spinwheel, you're going to need this infrastructure layer to simplify it, because not every company is going to go out there and build 20,000 connections and build their own logic, proprietary logic, to figure out how to orchestrate it all. That's where we provide our value.
Yeah, I think that it's one of those kind of sectors that will always be a little bit fragmented, so you will have a little bit of the data here, a little bit of the data there, so you cannot have one single source of truth that can cover everything. So I totally agree under that perspective. I also see at the same time certain region in the world that are trying to go in the same direction. So, for example, I think that Europe, under this perspective, made a very good work with the open banking, and I think that there are certain kind of regions that are following. Like, for example, in Latin America, you have Brazil actually, let's say, leading the way in terms of open banking regulation, and every other country is trying to follow that lead. So sooner or later, in my opinion, we will arrive at something that is kind of similar to what we have in Europe, or at least in the same direction. But everywhere else, everything is fragmented, and you have multiple sources, so it's never going to be easy, to be honest. You've been mentioning a lot of automation on the back end, and of course AI. And I was wondering, how do you actually use AI to make sense of all of this? Because it's kind of easy to say, okay, I'm using it, but I would love to understand which are the main use cases where you actually using that.
Yeah, the main use case here is, like I mentioned, think about, let's take a common use case that we see today. And this use case is a debt consolidation or maybe a balance transfer on a credit card, right? So this is a user is going and they want to take out a personal loan, for example, where they want to use the funds from that new loan to pay off high interest, maybe credit card debt, or consolidate other debt that they have today that might be in 4, 5, 6 different lenders, right? The very first thing is you have to understand who the consumer is, right? Then after that, you have to understand what are all these accounts that they may have. You have to discover those accounts. Then after you discover those accounts, you have to then understand what are the unique account numbers for each of those. Once you have the account numbers for those, then you have to understand how you can get the data necessary to understand how much should be paid, which ones should be paid off, how to present it to the consumer, the name of the product that they're using, all the different attributes of each of those different types of loans that they may have that they might consolidate. And then once you have all of that, then you may say, okay, well, I want to consolidate these 3, but not these 2. or
Mm.
some mix of those. That whole process is extremely complicated because almost every one of those attributes and actions is not done through a single API endpoint that we have on the back end. It's oftentimes, 10, 15, 16 different API endpoints that we have to go get
Wow.
to. So where the AI comes into play, the AI is able to understand and automate the sequencing and orchestration of which endpoints to hit when in order to support this use case. And
Mm.
previously, that's something that a human would have to do and look and say, okay, well, I've got this. Okay, then I got to go get this piece. And then if I
Yeah.
have this piece, then I can go and get that one. And if I have that, then I can actually enable a payment. But then I need to know the amount. So I'm going to come back over here. Like that becomes a very, very messy problem to solve. And it's hard to scale. But with AI, we can actually automate out that. And so we actually have an AI agent that is spun up for every client, for every consumer that can actually do all that work instead of putting that back on the consumer. Imagine if I asked
Mm.
you, I said, okay, Michelle, what loans do you have? And you have to go find, okay, now tell me how much you owe on each one. Okay, let me go find. Now, give me the account numbers for each of those. Okay, let me go find those. Okay, now
Yeah.
let's go see how much you're going to pay. Okay, great. Now, Michelle, I'm going to give you the money and then you have to go pay them. Like you would have to go do that's what the human would have to do before. What we're doing now
Yeah.
is our AI agents are able to automate all of that. And that's what makes this seamless and scalable.
That's very interesting. That would have been a full-time job to collect
Absolutely.
all of those information.
Absolutely.
Yeah. No, that's very, very interesting. I know that recently you closed your last funding round, 30 million, if I remember correctly. I think that you did that in one of the potentially worst period for a fintech to raise funds. Maybe the second one after 2022, probably.
Yeah.
But I was wondering, how was the entire process? Um, you know, doing that in a period where everyone is actually looking only for AI ideas is kind of challenging by itself. But I was wondering, how did you find the capital market right now?
Listen, I think it's the answer is close to what you said at the end there. It's a market, right? And
Mm,
so you have to understand that you can't you can't set the market, but you can
mm,
understand how you will be valued and positioned in that market. And so, that whole fundraising process, what we understood was, um, especially for fintech,
mm,
not so much AI, because AI, I think people are willing to bet on the technology and not the business as much. But within fintech, you have to have a business.
mm.
And so,
That's a very,
what we
very good
focused
point.
on is, and listen, we got some fantastic technology. We got
Mm,
amazing AI technology. We've done more agentic AI uh, um, uh, transactions than probably most companies you've ever heard of that are in the AI space themselves. But the reality is that when we went through this process, it was really important for us to not only prove to ourselves, but be able to prove beyond a shadow of a doubt to any investor that this is not only a real business, but it's scaling, it's growing, and this is
mm,
going to be a massive, massive business in the future. And that's really what our focus was. It's someone early on told me that when you're a seed stage company, you sell the dream.
mm,
When you get to like an A or B company, you sell the data. The data has to speak for itself. The insights, your financials, they have to speak for themselves to say, hey, is this a viable company or not? Like, are they growing? Um, and so we actually delayed our fundraise until we internally as a leadership team felt that this business was at a stage and a scale that would be attractive to any investor that's out
mm,
there. And so when you ask me how do we navigate that, it's really focused on, we knew that the market was not going to put a premium on a fintech company. We knew the market was not going to put a
mm,
premium on a great vision um, or a technology proof of concept. We knew that they were going to really value on, do you have a real business? Is this a real
mm.
business? Is it growing? Do you have annual recurring revenue that demonstrates that? Do you have the core fundamentals of a P&L that demonstrate that? And that's really what our focus was. Um, and so, yeah, it was intentional, very intentional the way we went
Mm.
about that.
I think that you made a couple of very good points. First of all, I strongly agree on the bet on AI. I would say so, and from a certain perspective, it also makes a lot of sense. It's
Sure.
one of those kind of technologies that is so disrupting and so uh, era defining, I will call it, that even if you bet in a lot of them and you just take one one good one, then you're going to make a lot of money for sure. So I understand the point, and at the same time I strongly agree on business, let's say fintechs being business and not idea anymore. So I still remember, in 2020 and 2029, when you could actually raise funds even in Europe, that is kind of a different market, with just a very good idea, and a very good pitch deck. That time is absolutely gone, in every market in the world, in my opinion. Every countries, every geographies, every verticals, you
AI
cannot do that
maybe.
anymore.
AI you might be able to do a
Yeah,
little of that
maybe
still,
AI.
but you're
Yeah,
right. But I think
good
generally speaking,
point.
you're right.
Fair point. Fair point. Maybe AI is still doable, but again, also in AI, you have so many tools right now that are
That's right.
actually able to provide you an MVP to actually test the market. That
Yep.
some people actually expect that. And it's absolutely true that fintech right now needs to prove that is a reasonable or sustainable business. You cannot do that for 10 years in a row without posting a profit or without posting revenue like it was 10 years ago. And that, in my opinion, is also more sustainable and healthy for certain kind of geographies and for certain kind of businesses. Having that kind of expectation from the other side. But yeah, I think that is a very good perspective. Also, there is something that I wanted to talk about that I don't get to talk about very often. So you said that you already did two exits basically before starting your third companies. And how was that kind of process for you? Because I did a couple of exits by myself in the past, but they were a smaller one probably. And a lot of founders out there, they never experienced one, so they don't know to get the dynamics, they don't know to get, the waiting time mostly, and those kind of things. So can you guide me through that kind of process on your personal perspective, of course?
Yeah. I will tell you that the exits that I went through strongly shaped my perspective on the next company
Mm.
that I did. Um, because with the first company, with Blackhawk, uh, I was like employee number 10 or 11. I can't remember the
Mm.
exact number, but it was so early, um, and I was there for a decade, and created so much value, and it ended up going public. And so I had a really great opportunity to see that type of exit where there was a public offering,
Yeah.
and that was a fantastic learning experience, and I will always value that helped me understand a lot. But it also made me realize that if you're not actually the the person who's like the founder, the actual founder of the company, um, it's hard to recognize the value, truly the value that you
Mm.
are creating within a company. And so that's why in 2015, my I wanted to take some time personally to focus on my personal life, but then also my co-founder and I said, hey, let's do our own, let's do a startup, a pure startup, and we did that. And in that one, had a great experience as well, but we also recognized that um, we exited too early. So in that
Mm.
model, we had exited, and it almost, that exit sort of taught us to have more conviction and faith in ourselves to uh, to build something really big and impactful.
Mm.
We exited it too early. Um, Fantastic situation. So I don't have any regrets. But when we look back, we recognize that we ourselves didn't put enough value on what we had created,
Mm.
because the value that the public market, because once it was acquired, our assets were then part of a public offering, and the public
Mm.
offering was for nearly 11x what we had got. And so it made us
Yeah.
realize, hey, we didn't have that right perspective. And so that influenced when we started spinning, we said, hey, you know what? Um, we're going to do this to create the most, the maximum value for our clients, for consumers, and our shareholders and employees. Uh, and I think having that perspective is helpful, because in some ways, the very first time we did this, being able to say that you had a successful outcome was the goal,
Mhm.
and that was short sighted. The reality is that having a successful outcome is great, But that's not, in my opinion, what your focus should be. The focus should be is how do you create the maximum value
Mm.
possible? And
Yeah.
that's really what I think the biggest, as we've kind of gone through this process for myself, and my co-founder, that's been sort of the recognition, for us as we've gone through that.
Mm. I to be honest, I really really agree with this one. Mostly about the kind of value and impact over time. Like I had a similar experience, probably with smaller numbers, to be honest. But the exit that I made, for example, nearly 12 months, 15 months after, I saw the same company get valued 3x the amount that I was.
Oh
So
my God.
and the first thought is always, okay, I should have wait, I should have waited, staying a
Yeah,
little bit more, all of those kind of things. But then I think that you also realize it's not just about the money itself, about the value itself, but it's about what are you actually able to build and grow over time.
I think you're right.
And I think that that shapes a lot the kind of perspective that you have when you start something else, and the kind of long-term vision that you have. So and I truly believe that once you've been through it, you see things and volumes in a totally different perspective,
I agree.
mostly about the long term, first of all, the kind of impact that you can have on the market, and something that I realized also, the kind of things that you can do in a short amount of time that is maybe probably double the amount that you actually think. And that actually have a very good impact on the kind of perspective that you have long term and those kind of things.
I agree. I also think, to your point, having that perspective um, impacts and, in my opinion, improves the decision making as you build the company, right? Because if
Mm,
you are doing this for maybe a more short-sighted goal around, let's say, how do I just get my valuation the highest in the next round, or can I get this exit in the next year? Um, I don't think you're not. I don't think you think about the problem space and the market and the opportunities
yeah.
in the right way, right? It almost can kind of cloud um, uh, or compete for your focus. And so I think that when you don't have that, you can really be clear eyed around
Mm,
where you're really trying to go. How do you really build something that's going to be really meaningful? And we always talk about this internally for us right now is, you know, we want this to be a generational company. Right? Like
mhm,
that's what we want this to be. And there's a lot of things underneath that really define what a generational company is, but that's important for us. And if we do all those things, then like the value and the exit and all those things, they'll fall into place.
yeah.
We're not focused on an exit right now. We're
Mm,
focused on building. It's interesting, the name of your podcast. We're focused on building and building something
yeah.
that's meaningful, impactful, uh, and that we believe can be generational.
Yeah, I think that is this is also a common trait of second time and third time founders, because they've been through it, and they realize that money is not the final target. It's never been, and it's not anymore for them. So they can actually focus on building something that makes sense and fill gaps in the market. Help final consumer. And I think that you actually see the difference when speaking with them. When speaking with people that have a target and a vision that is really a vision and not just a slide, that makes a lot of sense, to be honest.
Yeah.
Yeah.
Question for you, Michelle. Do you think that it's a requirement to have to go through sort of that first exit to then have the perspective on the second? Because it's
Mm,
hard. I will tell you, I don't disparage or think that maybe someone who's going through this for the first time, I don't think that I wouldn't look down on them because they're thinking about the exit. Because there's this pressure that someone has, like,
mhm.
hey, I want this to become something, and becoming something. That exit sometimes gives you that thought, like, hey, I created something and someone else valued it, right? So, do you think it's just part of the journey that you have to go through that to then have that perspective?
It's a very good question, to be honest. And my answer is that, in my opinion, it strongly depends on the background. So if you are coming from, let's say, a disadvantaged situation, and you need, a little bit of, um, let's say, validation in life, that amount at the end of the transaction, that amount of the deal, it's like the validation that you are looking for in those kind of things. And maybe you need to go through that steps and through that process to understand that there's something more. But if you come from a different background and you realize that maybe that amount is obviously huge and it's obviously life changing for a lot of people, but maybe the amount is not the thing in itself, and you want to do something more than just a mere number on a term sheet. And so they realized that maybe a little bit before the second deal, the third deal, or something like that. But I think that it strongly depends on the background. First of all, I saw a couple of first-time founders that were like really something different. They had so clear vision, so clear rational thoughts, and everything else that you could actually say to yourself, okay, this person actually got it together from deal one, from founding team number one, you know. But I would say that 90% of the time you need to go through it before trying to understand, you know, if that is really for you, first of all, because it's not for everyone, and if you actually want to have an impact and not just a number. And of course that answer will change for a lot of people out there because everyone will think differently, but yeah, this is at least what I saw in the market.
Yeah. No, it's good feedback. Good thought.
Yeah. Um, I would also love to understand a little bit more. How do you see the startup market today? I know that is a very, very wide, high level question, but I would like to deep dive a little bit more. So you sit down in the US, that is of course a very specific startup ecosystem, you know, with high expectation, high numbers, and everything else. I'm sitting on a different side of the globe, in Europe, where we are trying to, you know, fill that gap. We will probably never do, but we are trying to do that. And at the same time, I've been speaking with a lot of founders, you know, in the MENA region, in Southeast Asia, and you see very different kind of startup ecosystem out there. I would like your opinion on specifically the US right now, and how do you see the startup ecosystem, you know, with people founding new companies today compared to when you did, for example, your first one or your second one? And how do you, you know, feel the market today?
Yeah. So when I think about the answer to that question, I think there's a couple ways to look at it.
Mm.
I would say that when you think about the tools and the resources, all of the tools and resources that someone needs to get something off the ground,
Mm-hmm.
to start a company, to take something from idea to prototype to MVP to first customer, I think it's never been easier. I think that
Mm.
we live in an age where this is it's amazing, and I love it to see how um, combination of AI and the impact that internet has had, and and the interconnectedness that the web and APIs have provided. You know, literally anybody can take an idea and take it to concept and even get like a first customer. I think it's, you know, before, the barriers to entry to do that were so hard. You know, previously you probably needed capital
Yeah.
to be able to even get to that stage, because building something required way much more, you know, so much more code, or required so many more things that you needed to get there, and people and all these things. And from at least the US perspective, I don't think it's ever been easier
Mm.
for the proverbial two people in a garage to get something to market and get a first customer and have a proof point that you have a you know, minimal viable product, and you can prove product market fit, which I think is, you know, one of the hardest things you can do,
Yeah.
you know, in a startup. So I think it's never been easier to do that. On the markets and the capital markets, the way I look at this is I say, listen, you know, probably a VC or an institutional investor is going to give you the better perspective on that. From my perspective, I think it really comes down to the individuals, the founders. How much can they, and are they willing um, to sacrifice to get to that first product market fit, to that first customer?
Mm.
And the way the example I would give there is, you know, you have people who say like, hey, I'm going to drop out of college and I'm going to start a startup, or I'm going to quit my job and do a startup. And, you know, the people who can do that a lot of times have the luxury of, you know, not having to worry about how food's going to get on their table.
Yeah.
And you kind of mentioned this earlier, the kind of the background that someone's coming from. I
Mm.
think that part is, to me, still something that could be the largest gating factor, is the ability that someone has, the financial freedom that they may have to take that leap. because as I said, I don't think it's ever been easier. I think you need far less than you've ever needed in the past to get a business off the ground in the US,
Yeah.
to start a startup and prove it and get your first customer. Um, but that you still have to be able to be in a position to do that. Now, I think some people may say I can do this moonlighting, and you see that a little bit more. Some people may say, well, hey, like I'm going to just quit and I'm not going to pay myself for 6 months, and you do that. So I think to me in the US, that's to me the part that I think is still comes down to the individual and how much risk
Yeah.
you can or are willing to take. And when you have a lot of responsibilities and you have a lot to lose, it's hard. It's gonna be hard to say
Yeah.
I'm gonna just forego income. And so maybe your answer there is you moonlight and you do it, nights and weekends, and you get something on the ground. I think what's tough about that is when you don't think about it and you're not living it every single day, it's really hard to
Yeah.
still kind of get that horsepower, mental horsepower, to get it to where it needs to be. Um, but the other side of that is a lot of people may not have the ability to say, I'm going to take no income. I'm going to not worry about anything, not worry about my finances. And I'm going to live off of, top ramen for 6 months. Like
Yeah.
some people technically can't do that. So for me, I think that in the US, um, you know, if you really want to like even encourage the ecosystem even more, is uh, how can you enable that aspect of starting a company? Um, and I still think that in the US, stuff is going in the right direction there. And I think
Yeah.
there's also just the personal mentality of how much risk are you willing to take?
Mm.
Can you, and how much are you willing to take? To me, I think that's the gating factor, because I don't think it's ever been easier to get
Mm.
a product off the ground and get your first customer.
Yeah, I think that the risk appetite in the US is really making the difference, between every other startup ecosystem. Even if right now I think that Europe is making the right step to go in that direction, you see other kind of startup ecosystem all over the world trying to fill that gap. So I think that everyone is trying to, go and arrive where the United States are right now. And it's very, very interesting because I strongly feel your point of view, because I was recently speaking with a founder of a fintech company in Pakistan, at Riyadh at Money 2020, and they were telling me about the story, basically the story that you just described. They started something, and one day from the other, regulation changed in the country, and they cannot do what they were doing anymore, like at all. Transactions were totally going to zero because they cannot do transaction anymore because of a new regulation, and they had to reinvent themselves to pivot in the middle of the year, like from one day to another. And the real problem wasn't the fact that, they had to change their business, they had to change the logic, all of those kind of things, because you can figure those things out.
That's right.
But the real problem was that those people were not profitable. They were basing their life on that business to be sustainable, to actually put food on the table. And so the problem there was, okay, if I cannot do this anymore, I really need to find a job very, very soon, because otherwise I
That's right.
cannot eat. And that's not the case for everyone. In certain kind of the reason of the world, uh, it's kind of easier. You have the privilege to do that. I could potentially have the privilege of doing that. But there are people out there that are, betting the life and betting the kind of, life model that they have on those kind of things. So it's not always the same case for everyone. So it's a very good
Absolutely.
point.
Absolutely. I mean, listen, to underscore that point, we had a third founder when we started
Mm.
Spinwheel, and it took us a while to get this point where we were making any money, and we had to forego paying ourselves for a while, and it wasn't for him, and I don't fault him. He was in a
Yeah.
situation where he couldn't do that as long as myself and my other co-founder could. So you're absolutely right, and yeah, I think that plays out time and time again.
Yeah, absolutely. Yes. Last question on my side. I think that you have a great experience in this field, a lot of different experiences, different verticals, starting companies, raising money, exiting from companies, so you basically have the full spectrum there. So my last question is, which kind of advice would you give to someone starting a company today, no matter the geography, so just something that everyone out there can use to actually launch a successful business?
Uh, I think there's a degree of luck in anything that we
Mm.
do,
Yeah.
and so nothing is going to be within your control 100%. And so the thing that stands out to me is two things actually. It's doing the work. It's hard. It's not easy. A lot of the stories of that glamorize someone who had a great idea and then got to billion overnight, and they're driving around
Wow.
in the fanciest cars. Like that's sort of what people sometimes hold up with that, but like that's not the vast majority of what startups are.
Yeah.
And it's people call it the product market fit slog. You have to spend time really at it and working at it, and so doing that work. But then the other part of it is just the perseverance. Someone else described it to me that it's startups are like roller coasters, and you have your ups and downs. And as you continue on that journey, the highs get higher and the lows get lower. And it's that perseverance to one, acknowledge that, and to continue to push through, knowing that you're gonna have another big
Yeah.
high and you have another big low.
Yeah.
Um, and my co-founder and I talk about this all the time, and it's sort of what we just said in the previous conversation. It's not for everybody because psychologically you have to
It's hard.
not
Yeah.
only be prepared for it, but like almost want that. And so what I would give advice to folks is like, focus on something that solves a real problem. Do the work to prove to yourself that it truly is solving a problem, um, and embrace the roller coaster that you are embarking on, because that is what it is going to be. And I think that's what I would say is the rest of it, luck may factor in, but yeah, if you do those things, I
Yeah.
think you're setting yourself up to take advantage of the situations that are in front of you.
Yeah, you need to, embark for the journey. Like, you really need to like the life that you're going to spend on
Yeah,
those kind of things. Yeah.
that's right.
Yeah.
Yeah.
That's a very good point. Thomas, it has been a pleasure to speak with you. It
Thank you
was
so
an
much.
absolutely
Likewise.
amazing conversation. And yeah, again, good luck for everything that you're doing at Spinwheel, and I'm looking forward for the next steps for you guys.
Thank you very much. I appreciate it. Thank you for the time. Thanks for having
Thank
me.
you. Thank you again. Bye bye.